The Firm, India's only show on corporate law, tax and audit matters.
Last week, the government proposed to do away with most tax deductions starting April 1st, 2017. Looks like it's time to say bye-bye to tax deductions for once and for all. This is a move that will simplify tax policy and in the long term, an excellent thing to do. In the short term, though, some industries will feel the pain more than others. Well, to do that sector-wise analysis, I'm joined by Manish Shah of SKP. Manish, good afternoon. Thank you for joining us. Let's start first with the first head of deduction that the government's proposed to do away with, which is Section 32, depreciation, where they've said the rate of depreciation on assets proposed to be reduced from the current 180, there are two slabs, all the way to 60 by the 1st of April 2017. Are there specific industries that will get most impacted by this, who are availing of the accelerated depreciation and will not be able to start in 2017?
Yeah. So basically, there are certain industry to which this accelerated depreciation has been provided. Like some of the industries, they are enjoying depreciation at the rate of 80%, and some of the industry, they are enjoying the depreciation at the rate of 100%. For example, certain industries which are into the infrastructure development in the form of water supply project or the water treatment plant. Today they are enjoying 100% depreciation.
It will go down to 60.
So it will go down to 60%. Similarly, there are so many companies which provide the air pollution control equipment, water pollution control equipment. These particular equipments today enjoy 100% depreciation. That will also go down to 60%. Similarly, the industries which are engaged in the solid waste management, providing the clean and renewable energy devices. So they also would now get depreciation.
So, I know, those who are watching us from a market point of view will be interested. You've listed in the impacted industries list, mining, iron and steel, sugar, and clean and renewable energy companies, right? These are all market darlings to some extent. These industries, so when you say mining, all mining businesses will get impacted by this?
So there are certain equipments. For example, the lamp which they use in the mining industry. That will now get 60% depreciation.
What about iron and steel? Across iron and steel this will happen? So like, Tata Steel, JSW, will they all be impacted?
No, so iron and steel, they are using a particular type of equipment
on which they were getting accelerated depreciation.
100% depreciation. Now it will become 60%.
And clean and renewable energy, again, it's only a certain kind of equipment that was enjoying accelerated depreciation that will go away, right?
Correct. So like you have a solar energy, that type of equipment which were enjoying 100%, now they will get only 60% depreciation.
Okay, fine. Next head of deduction, which is deduction of capital expenditure for specified business. Here you've said that the weighted deduction of 150% for capital expenditure that was available to certain businesses will be reduced to 100% starting 1st April 2017. Again, which industries will be impacted?
So there are, today there are 5 types of industries which are enjoying this 150% weighted deduction. Starting with one is those who are providing cold chain facility. The other one is the warehouse facility for the purpose of agricultural produce. The third one is the hospital who's setting up the hospital of more than 100 bed patient hospital. So they are enjoying.
So all the large hospitals will come into that.
Fourth is the affordable housing project.
All affordable housing.
All affordable housing project.
So any developer doing affordable housing will now enjoy a reduced weighted deduction for capital expenditure.
In respect of capital expenditure, today they are getting 150%.
They'll get 100%.
They will get 100%. But this affordable housing project is a notified affordable housing project which are approved by the government.
Got it. And production of fertilizers
and fertilizers, of course.
Yeah, just to go back to the first point when we were talking about accelerated depreciation, I think last year the government made provision for additional accelerated depreciation to push investment activity in the country. That additional 20% will stay.
So there are 2 types of things. One is the additional depreciation of 20% that would continue to be enjoyed. And the other one is the investment allowance reserves, where they have already provided certain inbuilt sunset clauses. But that would also continue till that those sunset clauses are exhausted.
Okay, fine. The third one, and I want to spend least time on this because really there is no big corporate impact on this. Deduction for payment towards certain schemes and projects. There was a 100% deduction available earlier. Now there will be no such deduction starting April 1st, 2017. That's the proposal. And the key impact area will be felt in the NGO industry. But you're saying certain CSR projects of companies will also feel that.
So correct. So basically, this is the deduction provided under Section 35AC of the Income Tax Act, where the companies who are contributing to certain specified NGOs and institutions, they were getting 100% deduction of their contribution. And as everybody must be knowing that for CSR purpose, if the company incurs the expenditure, it is not allowable deduction.
Correct.
But there was no restrictions for the company to contribute towards this type of project. So by doing away with this particular benefit, the companies now would not be able to enjoy this 100%.
Okay. Let's come to the big one now. I know that the market's been looking very closely on this one. Expenditure on scientific research, right?
Yeah.
Weighted deductions in the range of 125 to 200% available for expenditure towards scientific research, social science and statistical research. Right. And this is to be reduced to 100%. So from 125 to 200% to be reduced to 100% starting April 1st, 2017.
Right.
That's the proposal.
Yeah.
I'm assuming that pharma will be the biggest impact area.
Absolutely,
in this, right?
absolutely. Because the pharma sector, their main bedrock of kind of growing their industry is scientific research. And today they are actually enjoying 200% deduction for carrying out in-house scientific research.
Right.
By this particular proposal, they would be kind of discouraged to spend heavy money on carrying out this particular scientific research. Apart from in-house research, there are companies who can actually contribute to other institutes.
I was just going to ask that. Like many companies have moved the research function out into subsidiaries, etc. So if you're not doing it within your company, if you're funding it via subsidiary, etc., will that also be impacted by the reduction?
Absolutely.
In this?
So there what happens that when I'm contributing to that particular subsidiary, today I'm enjoying the weighted deduction of either 125% or 175%.
Okay.
Even that deduction would be taken away and I will be able to enjoy only 100% deduction.
So Manish, if because it's a necessity in the pharma industry that you continue to do that scientific research, it's not an option really, to be honest.
Right.
Essentially, this is a bottom line impact then?
No,
will we see this in terms of higher tax outgo and therefore lower profits, or how will this show up in the financials of pharma companies?
No, obviously this particular benefit is actually available in the income tax. So as such, there is no bottom line impact of this particular expenditure, but in the form of additional tax liability,
yes,
there is definitely going to be a bottom line impact. Because those who are spending very heavily on scientific research and today they are enjoying 200% benefit, in the form of additional tax liability, it would definitely impact the bottom line.
So if they were enjoying 200%, technically they now come down to about 100%, right?
100%, absolutely.
So in that sense, I mean, if one was to try and understand the proportion of additional taxes paid, those are the numbers to keep in mind.
Correct.
This is under section 80 now, the next head of deduction, which is for profits from the infrastructure facility. This is a big whammy for the infrastructure industry, because essentially what's going to happen is 100% deduction for profits from developing, operating and maintaining certain specified infrastructure facilities for 10 consecutive years will be discontinued starting April 1st, 2017. That's the proposal, and a large number of infrastructure industries are on your list or impact list, right? Take us through them.
Absolutely. So today, there is no sunset clause provided. So the infrastructure, like you have road development, the highway projects, the port development, airport, inland water facilities, solid waste management, water treatment plants. So all these infrastructure facility, they are actually enjoying 100% of their tax as exempt.
So all profits are exempt from tax?
Absolutely.
Many of these facilities?
Absolutely.
Okay. And that will go away?
Yeah. So now they propose to provide the sunset clause that they have to start their facility. If they start their facility before 31st March 2017, then they can get the benefit. But if they start their facility after 1st April 2017,
the benefit will no longer
go away.
Okay. So just to clarify this a little bit, because infrastructure again is a key area where there are many listed companies. So investors will be curious to know what the impact on the financials of those companies will be. I don't mean to make this company specific, but if you look at GMRs, even some aspects of L&T where they own the infrastructure projects, since those projects have either already begun work or built or operationalized, they will continue to enjoy the tax incentive till the life of that project. It's only for new projects that you will not be able to avail of it, right?
So they have to expedite the project and they have to start before 31st March 17 to continue to get the benefit for next 10 years.
Okay. If they start, but on the current projects, that benefit will continue till the life of the project. So if you've got an airport that you've built already, and whatever profit deduction that you're getting for that airport, tax deduction on profit, that will continue for the life of that airport.
Absolutely. Right? Life of the means the period is 10 years.
So the 10-year consecutive period, you'll get that.
Absolutely.
Okay, there are two sunset clauses I wanted to bring in here. Power generation and distribution and certain undertakings in the Northeast. This was again done to help develop the Northeast. In both those cases, there were tax incentives available, and those tax incentives will only be available till 1st April 2017.
Correct.
The impact on the power industry will be available big one? Can you explain that to us?
Yeah, so basically what happens that conventionally what used to happen that every budget they were extending the sunset date.
Yeah.
So, you know, like we have also seen in the past that this 31st March 12 has been extended to 31st March.
Yeah, I get that. So this is
forth.
all power generation and all power distribution.
Absolutely. So now they have provided that there would not be any extension of this particular sunset date.
And what is the specific nature of tax incentive that they were getting?
So they were also getting 100% tax benefit on the profits what they used to get for a period of 10 years.
Okay. And if this proposal goes through, that deduction will only last till 1st April 2017.
Correct.
So FY18 onwards, no tax deduction.
So any power projects which begins after 1st April 2017, they will not enjoy the benefit. Similar to like other infrastructure, if they begin before 31st March 2017, then they will continue to get benefit for next 10 years.
Okay, fine. Okay, so that's how it works. That's the life of the benefit, so to speak.
Correct.
Okay. Now we'll come to the other key impacted area, which is SEZs.
Right.
Both the development of SEZs and those businesses that are located in SEZs
right.
and are exporting, right?
Correct.
In both cases, from what I understand, in the case of deduction for profits from the development of special economic zones,
right.
which is a section 80.
80 IAB.
80 IAB deduction. 100% deduction for profits from developing an SEZ for 10 consecutive years.
Correct.
That benefit will be discontinued from 1st April 2017.
Correct.
But those SEZs that are already in place and therefore will continue to enjoy that for the full 10 years of the life of that 10 years.
Absolutely.
Right?
Absolutely.
So this impacts those companies that are in the business of developing SEZs.
Correct.
Okay. When it comes to the deduction for profits from export of articles and things located in an SEZ unit, right? There you said the deduction was 100% for the first 5 years and 50% for the next 10 years.
Correct.
And that will be discontinued from 1st April 2017.
Correct.
But it will be discontinued for new ones.
For new, correct.
So if you were a unit in an SEZ today,
yes,
you would continue to enjoy those benefits for those 15 years. So if you had started today, you'd get it for 15 years and then it would fall off.
Absolutely.
Right?
Absolutely.
And if you were to start after April 1st, 2017, you would get nothing.
Not get any benefit.
Zero, nada.
Absolutely.
So the SEZ benefit was anyways a limited one.
Right.
We knew it was a dying benefit to begin with, and now they've put a stop date to it.
Correct.
Okay.
Correct.
Most impacted from the SEZ point of view?
So basically all the export sectors. So we have like software, IT-enabled services, gem and jewelry sector, pharmaceutical sectors, apparel sectors. So these are, the biggest exporter for the country. They would be most impacted by
But not immediate impact. If they're already doing business out of an SEZ,
they will continue to get
they will continue to get it for the life of whatever's the remaining life of that 15-year period.
Those who are thinking of setting up of a new unit, they should immediately start before 31st March 17 to avail of this particular benefit.
But again, end date is 15 years max. That was already declared for SEZs, right?
It was already there.
Yeah.
The date they have specified is 31st March 17. That is the cutoff date.
Got it. Okay, fine. So thereafter, no new benefits available under SEZs.
Correct.
Deduction for profits from commercial production of mineral oil and natural gas. This is section 81B. Right?
80IB.
80IB, sorry. Okay. 100% deduction for profits from commercial production of mineral oils and natural gas for 7 consecutive years.
Correct.
That was the benefit earlier.
Right.
The proposal is to discontinue this from 1st April 2017.
Right.
Who gets impacted?
So here, see, basically for mineral oil, again, the sunset clause was already there.
Yeah.
But now they have provided the sunset clause in respect of natural gas.
Okay.
So those who are in the business of production of natural gas, they would be most impacted. Again, here also now the sunset clause is available. So they have to start their activity before 31st March 2017.
Right.
Thereafter, they would not get the benefit.
And if they started before 31st March 2017, even then that benefit is available only for 7 years.
7 years,
right?
Correct.
So that benefit would anyways fall off after 7 years.
Absolutely.
Right. Okay, cool. There are 2 other categories which I want to again spend only 30 seconds on. Section 35CCC, deduction for expenditure on agricultural extension projects.
Yeah.
And then section 35CCD, which is deduction for expenditure towards notified skill development projects.
Correct.
In both of these cases, the weighted deduction that was available for expenditure towards these activities has been reduced from 150% to 100% starting April 1st, 2017.
Correct.
You've said this impact will be across industries. Give me one illustration to give me a sense or an idea of who gets impacted.
So basically any company, if they are looking at kind of encouraging the agricultural research or the skill development project, today they can contribute to the notified institution, and they can avail of this 150% benefit of the expenditure.
Right.
Now with this particular thing, they will not be able to get this 150%. So it is across all the kind of company, and in fact this agricultural project is available to all the SSEs, not only restricted to the companies.
Right.
So all the SSEs who wanted to get this benefit, they will not get this particular benefit, and the project who are getting this particular grant, they will also feel the pinch, because now the
funding will be reduced.
Funding would reduce.
Okay. So that brings me to the last one or two questions that I have very quickly. We've ascertained from this analysis that infrastructure, export-oriented industries, those working out of SEZs, and those involved in scientific research will be impacted the most by the phasing out of these deductions.
Correct.
Though many of them, if they do get into these activities or already are in these activities, will continue to enjoy them for at least another 5 or 10 years before the deduction is phased out altogether.
Completely.
Right? So it's not an immediate shock, so to speak, right? Okay. If this were to happen, wouldn't it be logical that MAT would fall off? Because MAT was an alternate tax, right? It said if you weren't making taxable profits, then we'll tax book profits. But if the deductions go away, you will be making taxable profits.
Absolutely.
So do they have to do any notification to MAT? Do they have to change anything to MAT? Or will it be logical that companies will not pay MAT because they'll be paying tax on taxable profits?
Absolutely. See, in fact, the idea of MAT was that the company should pay tax on their, at least on their book profit.
Correct.
Because they were enjoying the other tax incentives. With the going away of all these tax incentives, it is very natural that MAT, according to me, MAT should be abolished. Even if it is not abolished, the payment of tax either under the income tax or under the book profit would more or less should remain same.
Okay, fine. So last 30 seconds, do you expect that profits of these industries, infrastructure, export-oriented businesses, scientific research-involved industries, will you expect to see a hit in profits over the next few years because of the doing away of these tax incentives or deductions?
Yeah, so one will have to actually kind of evaluate the impact of these tax incentives vis-a-vis the tax they would save by way of reduction in the corporate tax rate.
Depending on how that happens, he's promised to go to 25% in 3 years, which is by FY19.
Absolutely.
Okay, so let's see how he manages to do that.
Absolutely.
And that will be the interesting balancing act for the finance minister. He says he would like to reduce the corporate tax rate to 25% over the next 3 years, which is by FY19. And many of these deductions will no longer be available to new projects or new activities starting FY18 itself. So it'll be interesting to see how he balances this for industry. But get ready for a simpler tax code, and that's good news for everybody in business.
The Firm, India's only show on corporate law, tax and audit matters.